Sync. Welcome. I am the FX Savant, and in today's video I have a short day trade CHF JPY for a 2.5 risk to reward or something about a 41.4 pip TP. Found this trade idea using multi-time frame analysis and structure the right way. Yes, the right way. Yes, trading is supposed to be simple. It's not easy, but it's supposed to be simple. But using Confluences, which I will touch on in this video, can help you take your trading to an overall next level. If you enjoy this type of video and want to see more, please drop me a thumbs up. Hit that subscribe button, as my editor works really hard on these videos, as I do to produce the content. It's highly appreciated. Go down. Where are we going? Go ahead. You should already know. Just go check out the website. I'm really proud of it. It's just cool to say, hey man, go check out my website. So do me a favor, just check it out. You don't have to join anything. This signal was not only sent to the pro chat, it was sent to the free chat as well. We are both sitting risk-free. All right, so we have a 2.5 risk to reward ratio for about 41 pips. Let's break it down. All right, so let's get into it. Let's do what we do. Multi-time frame analysis and structure the right way. Where do we start? Well, before we do all that, let me jump to the daily and let me go back to the beginning of yesterday. And for this one, we're gonna hop down to the 4 hour, and in this video, I want to speak about trading confluences. So a confluence, it's just multiple things that come together to give you the same outcome. So it's a bunch of factors you stack in your favor that will produce the outcome that you want. So a 618 Fibonacci retracement, a break of a trend line, a moving average crossover, indicator divergence, price action, engulfing candles.
1345.
Thanks, Siri. These are confluences once you add them all together to produce the outcome that you want. So what you see in the market, if you see a bullish structure and you want to buy, you see a buy setup, you see a break of a trend line to the upside, you see a rejection of the 618 of the overall Fibonacci retracement taken to the overall upside, you see bullish engulfing candles, you start to see chart patterns, you start to see a inverted head and shoulders that you would like to see price break above the neckline and continue higher. So these are confluences, using all these together in this one specific area to help you get into this trade to give you the overall take profit that you need. But trading with confluences is one thing that every trader should do. So in this one, I want to go over the confluences that I had when I saw this trade set up. CHF JPY for a 2.5 risk to reward ratio or 41.4 pips. Little day trade I saw. And what did I do? I didn't start on the monthly, I didn't start on the weekly, I didn't start on the daily. Why? Let me show you real quick on the daily. This is all you need to see on the daily. This right here should be exactly why you know we don't need to look at the directional time frames. So follow along. The most common pattern in the market: impulse, correction, and impulse. So let's hop down on the 4 hour where I did look at this trade. And what did I see? Well, we had recently been making lower lows and lower highs, but we're in this overall uptrend. Extreme momentum to the upside on the daily, weekly, and monthly prices pushing to the upside. So what am I looking for? I'm looking for a buy position. Well, on the 4 hour, what do we have? Let me play it forward. On the 4 hour, what do we have? This is perfect spot right here. So on the 25th Sunday at 1 a.m., Monday 1 a.m., you know, I wake up 1 a.m., Monday 1 a.m. This is what we had. We are in a bullish market. Price has been making higher highs and higher lows on the daily, weekly, and monthly to the upside. On the 4 hour and on the hour, we're currently down, making lower lows and lower highs. But the area that we are in is previous resistance, now turned into support. So this area right here, if it is going to act as support, this is the area that I would like to see price stop and start to make higher highs and higher lows. The first indication that I wanted to see price making higher highs and higher lows was this right here. So this candle right here. Once this candle created the impulse to the upside, breaking structure, breaking the highs. I then saw that price was making lower lows and lower highs. Came down, was making lower lows, lower highs. Then we started to break structure to the upside, breaking structure here, coming down. I said, all right, this market is going to continue to the downside. We will have then created a double top here and price would continue to the downside. But if price does not want to continue to the downside, I am starting to see some sort of chart pattern to where I've seen the market created a structure, broke below, immediately came back into the area, closing bullish, breaking structure to the upside, coming and retesting this other area here. So if you can see a inverted head and shoulders is what I was seeing. So I wanted price to stop somewhere in here. I didn't want to see price continue making lower lows and lower highs for me to start looking at this market. So if we play it forward one more candlestick on the 4 hour, what do we see here? The most common pattern in the market is what? Can't stress it. Impulse, correction, and an impulse. What do we have here? On lower time frames, on our entry time frames, we have an impulse to the upside, we have a correction down, and we would like to see the next impulse to the upside. Well, let's talk about these confluences. We have an impulse, correction, and an impulse. That in itself is one thing, it's a fact. The market likes to create impulse, corrections, and impulses. So we have that going for us to the upside. We have price breaking structure. We have an impulse to the upside. We have a correction. Where did the correction come to? Well, if we take our Fibonacci from the low to the high of the overall impulse, we can see that price came down right in this area. And this 618 Fibonacci retracement level is also known as the golden Fibonacci retracement level. The 618 level is the golden ratio. This is the level you would love, ideally in a perfect world, you would love to see price come tap and then continue the move. But this 618 area is really important. But if we're looking at this, just adding confluences, we had a price breaking above structure, come back, retest the 618 of the overall Fibonacci level. What do we see? We have price making an impulse to the upside in an overall bullish market on the daily. So now we're breaking structure to the upside. We've broken recent resistance and we would like to see it now come and be retested as support. We have price coming down to the 618 golden Fibonacci ratio level. What else can we see? We have a inverted head and shoulders being created. What else can we see? We have a trend line with a false breakout, and this is on the 4 hour. Let me clean this up a little bit. This is on the 4 hour. Let's drop down to the hour time frame and get a little better picture of what we have. Now on the hour, what can we see? We can see that this is the recent 618 Fibonacci retracement zone that price came down and rejected from. So we have an impulse to the upside, the correction, and now we're starting to see now on the hour time frame, adding more to our confluences. What do we see? We see a structure confluence. So we see price coming down and creating higher highs and higher lows recently, most recent in this price action on the hour. So we came down, found resistance here, price then respected it as resistance and then broke above it, closed above it, and has now came back and retested this area, and we like to see this area act as support. So on the hourly, what do we have? We have price breaking structure to the upside. We have our inverted head and shoulders, as you can see a little more clearly here. An inverted head and shoulders, no, it's not going to be perfect. This is the foreign exchange market. Things are evolving every single second, every single day. The setups that you see in the books and online, they will not be as perfect as those. You will have to get a little bit of experience and dive into the market and look and actually identify what you're looking at. It's going to take some time, going to take some practice, but you have to do this to be able to identify these patterns. An inverted head and shoulders. Now I identify it easily by saying the left shoulder break below and then a no break below the left shoulder. So that's all I need to classify an inverted head and shoulders or a head and shoulders, regular head and shoulders. Price breaks up, comes back, breaks higher, breaks back into the area and does not break and close above the left shoulder for me for a regular head and shoulders. So just real quick, we have price breaking structure to the upside on the hour. So we're breaking structure after we've had a huge momentum shift to the upside on the daily, weekly, and 4 hour. We've had our retracement, our correction, this area in here. We have a trend line that we can use that looks like it is holding price. We have a false breakout here and then price coming back in with extreme bullish candles here, which looks like it trapped some traders that had their stops either below here or they had some positions, some orders set here that they wanted to short this market. So as it tapped their orders, price then came back into the the range, into the trading range, and has thus not came down and given them an opportunity to exit the market for no loss or little profits. So on the 15 minute, now that we've dropped down and seeing we have on the hour and the 15 minute, we can see that the structure is breaking to the upside, creating a W formation. After a W formation, what do we want to see? We want to see price come back down to the neckline, retrace, and then we will have an impulse correction and impulse that we can take advantage of. So if we play it forward, this candle is the candle that I sent out. You know I got to do it. This might be the last one though, for real. Not only did the paid members get this trade, but the free chat got this one as well. CHFJPY at 117.95. So right in this area, SL at 117.785. Stop loss down here and take profit at 118.35. So price right up in here. And it was sent 9:51 a.m. as you can see right there, with the picture, the before picture, and risk free. Just a little spoiler alert. We are currently sitting risk-free on the trade. So this is the time that we entered in the trade. Why? We had an W formation. I want to see price come back down to the neckline. If we get price come back down to the neckline and price holds here, we then have what? An impulse correction and impulse that we can take advantage of. Now, you may be looking at this saying there's all this structure to the left, all this in here that stops price. We have resistance here, resistance here, resistance here. And I want to tell you that we are in line with the momentum. So the momentum is to the upside. It's more than likely going to break structure to the upside because the momentum is to the upside in this market. Same with a market that is extremely bearish. It's more than likely going to break structure to the downside because it is an overall bearish market. So don't feel worried if you see, oh, I've taught to only trade in areas where there's no price to the left because it gives the price an easier time to move to my direction, whatever that is. I'm telling you, don't want to take trades against structure. Yes, your higher time frame, if you see that you are buying at resistance, that's not a good idea. But if you have an overall bias that the market is moving upwards and you have recently gotten in on an area of support, then there's no reason why you can't take that trade to see it breaking structure to the upside, because now it's in structure. It's breaking structure to the upside, creating higher highs and higher lows. So we entered on this candle right here, stops below the low. Do I need to talk about stops? Do I need to talk about targets? I'm sure you got that. Stops below the low. We know why. Because if we get price breaking structure to the downside, we no longer want to be in this market because we want to buy. Targets, the overall Fibonacci of the correction, and we have our target at the -272. So stops, targets, done. At least it should be, unless y'all want me to talk about them some more, because that's what I thought. Stops and targets, you know why we put them where we put them. Entry, we were breaking structure to the upside, so I wanted to enter in on recent resistance, now turn support. And if we play it forward, what do we get? Price breaking all the way up here. You know, we're risk free. Definitely, if it's up here, price is risk free. And since then, price has done a whole lot of playing around. So if we come to the market right now, right here on this day, it was a pretty overall easy trade to sit in. As soon as we got in, there was probably maybe 5 minutes of drawdown. As long as structure was holding price right here, it was no worry. Then price was shot up in our favor. This candle really made it an easy trade. Once this candle formed, I was like, all right, yeah, we really want to move to the upside, at least retest this structure, this high right in here. Since then, broke above it, came back, retested, and we look like we want to make a move to the overall target, which is 118.35, setting right in here. So with that being said, the confluences, what do we have? If we drop down on the daily, if we just go from the daily, recap real quick, we have an overall market that has made an impulse to the upside with a correction. Now, this is just general on the daily time frame. It wasn't a long-term trade. This is a little day trade. So let's add some more confluences. We had an inverted head and shoulders being formed. We had price on the 4 hour that had just broke structure to the upside, come back for a correction, stopped at the 618. We have a trend line with a false breakout, trapping some retail traders early on in the trading week, trapping them, not giving them an opportunity to get out of their trade on the 4 hour. On the hour, what do did we have? We had price starting to break above structure and create higher highs and higher lows without coming and retesting the left shoulder, breaking below it at least. We didn't even retest it. We didn't even break below it. On the 15 minute, what did we see? Price started to break structure, creating higher highs and higher lows, creating a W formation that we can use to our advantage. We know that the W formation wants to complete at the neckline. After we got our completion at the neckline, we saw that we had just created an impulse on the 15 minute, a correction on the 15 minute, and we were looking to take advantage of that, and we did. Once price came back down to recent resistant, now turned support at the neckline, we put our stops below the low, not the overall low, the most recent low, and then we put our target at the negative 2272 of the overall Fibonacci, taking on the correction. This gave us a favorable risk to reward, a 2.5 risk to reward for about 41 and a half pips, risking about 16 and a half pips. Price is now sitting at about 35 and a half pips, so about six-ish or so pips, risk-free. Well, that's it. Trade breakdown done. Show you how we got into the position using multi-time frame analysis, how we found our stops and put them in the right place using structure, found our take profit in the right place using our Fibonacci's as well. But other than that, man, I hope you all enjoyed the video. Make sure the post notifications are on. Make sure you are subscribed so you get updated and notified when I do drop educational content like this. If you like the video, man, just like it for me. Check out my website. Yeah, my website. Go check me out. And I'll see you all in the next one. I hope you have a positive day on and off the charts.